Hey guys, this is Rob Mitchell. Thanks for joining us today for the webinar, Must Know Emini S&P Methods and Systems, presented by Steve Myers. I'd like to introduce Steve. I have known Steve for several years now, and when I first met him, he came into our trading room, and he approached things with an intensity that I had never seen before. He just really got down into the nitty-gritty and started studying charts and marking them. In fact, I know for a fact he hand-marked over 200 days of charts to learn some of these patterns that we were trading. And it became pretty immediately apparent that Steve had a really somewhat of a gift for identifying patterns, pattern recognition, and a lot of trading is really about being able to recognize patterns. We often use simple A, B, C, D kinds of structures, just the market moving higher and higher, or lower and lower, higher highs and higher lows, and lower lows and lower highs. And Steve was able to integrate some of these concepts that we use really quickly and really did the work. And so he's not any ordinary a human being. And in addition to that, Steve has been a teacher for many, many years. And so on top of his ability to recognize the patterns and bring new ideas and insights to the table and share with the room, it also became apparent that he was able to share more than just that, but to impart these kinds of ideas in a way that's very simple and easy to understand. And I believe also Steve has a gift for teaching. So he's here presenting for you today. Before we go further, I think probably the next slide has to do with a risk and a risk disclaimer. I don't know if Steve's going to be telling you that you're going to make all this money here today, but this is a risk disclaimer that basically is telling you, and in my experience also, don't trade with money you don't have to use as risk capital. Because if you do, I've been doing this for a long time, you won't do well with it because you'll be trading the money. You'll be trading the money. Today, Steve's going to share some insights with you, things having to do with process, but he's probably not going to talk about the money as much as he's going to talk about the process of how you do it. And the reason that he is going to be talking at that level is because that's where it happens. Trading is a process. And once you find that process, it can be repeated over and over again with success. And Steve's going to share some of those things with you. So past performance is not necessarily indicative of future results. There's a risk loss trading futures. And only use money that you have for risk capital so that you can be free in your mind to trade the process and not get caught up in the money. And that will help to ensure that you'll do better than the other 95% of the traders that are all just thinking about the money and everything else. So without further delay, I'll hand it over to Steve. Steve, thanks for coming in today and taking your time to share. Again, I think you'll find Steve's a wonderful teacher and can impart ideas. Steve runs the stock index trading room, and we look forward to having you join him there for some deeper insights and deeper learning, because probably what Steve's going to be sharing with you today is just the tip of an iceberg where you can really open up to a lot of opportunity and learning that can advance you as a trader. So without further delay, here's Steve Myers. Thank you, Steve.
Rob, thank you so very much. First of all, none of this would have happened without your patience and kindness. And I did work hard, but I also worked on you and wore you out with questions. You were kind and patient to give me some time and help me along the way. We have some phenomenal tools we're going to share with you. Some people use the tools and are as successful as it will appear as I start to share with you what we do. Other people have the same tools and haven't trained themselves, and trading is a skill, and it can be taught. Skills can be taught and learned, but it's training. It's a process. But none of this would happen without Rob's 20 or 30 years of hard work. Rob's a genius, but he's also worked very, 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 very hard, and he's given us some phenomenal tools. So first thing I want to say, I'm going to try to be brief rather than lengthy today. There will be questions that you have that we'll try to get to at the end. There'll be some that we answer as we go, and there'll be some that we will handle in an email. I want to respect everyone's time. I tend to go fast rather than slow. We are recording this, and you can send your questions to support@stockindextradingroom.com. And over the next day or two, we tend to get lots of questions. There's like 275 people registered. Not everybody will make it by, but we'll have a lot of folks here looking at this, and we'll get a lot of questions. So it'll take us a little bit of time to get through it. Just be patient with us. I'm not qualified. I'm not licensed to give financial advice. I'm not qualified to give financial advice. So we tend not to talk about money. Money is the effect. Being a great trader is the cause. And Rob was exactly right. But if you focus on the money, you'll get killed. Quick story. I'll be brief, 30 seconds. I was playing mini tour golf just right after I got out of college, and it was the start of a not too illustrious playing career as a professional golfer. Scraped together $2,500, went down to Titusville, Florida, and played the only mini tour there was, JC Goosey's Space Coast. The last event, there were 4 in the series. The last event, I needed to shoot 34 on the back in order to make a check big enough to stay for another series. I've raked it around and kicked it around and got it to where, it was a couple under, coming to 18. And it's like, man, 18's a tough hole at the Magnolia course at Disney. Make a par, probably get to stay down. If not, I got to go back and figure out what I'm going to do for a while. Had about a 45-foot putt, downhill left to right, big 10-foot breaker, almost like the reverse of 14 at Augusta. And if I two-putt it, I get to stay. And, of course, there's just way too much pressure. Because if I make it, I make enough money to stay. If I don't, I don't. I knock it down there about 5 or 6 feet and don't even come close to hitting a hole. So if you're trading with your lunch money, like Rob says, this won't work. Just too much pressure. So try to allocate the amount of money that is necessary to make good decisions. And then this is very, very, very doable. Here I am. I wanted just to show that so we all, without a doubt, can know Rob's brilliant, smarter than I am, a better trader than I am, more articulate than I am. But I'm better looking. We argue about that. I'm better looking than he is. That's the joke. We'll go on. What we do, I'm going to show you a trade that we sort of stumbled across, to be honest with you, several months ago, 90% win rate. It happens every day. We have a new signal. Some of you have been here for some of our webinars. We call it the genie. I like that name. We have some silly names for some of our trades. They're doesn't matter what you call them or rose by any other name. 84% tested win rate over 8 months, and we can document that. We're going to talk about why we trade with the trend and how to identify the trend, how we use TTO to figure out the best spots to try to get into the market. We trade statistically proven probabilities to assure our winning. Now, I'm going to repeat that because I want you to get this. We trade statistically proven probabilities to assure our winning. Now, I'm going to go over that a little bit. That's, I think, the most enlightening information. When our members finally grab a hold of that concept and buy into that, it's like, okay, well, that makes perfect sense. And this, again, is very doable if you go about it the right way. One of our favorite places in the market to trade are traps. We have a signal that sort of shows us where those are taking place, and those have a really nice win rate. A lot of times, some of our traps will get the low bar or the high bar of the day. We will absolutely get the bottom or the top of the market, and we can trade from that the rest of the day in that direction, and those really are fun days to trade. We're going to talk briefly about directional bias and what the large traders tend to do. And then, more than anything in a room, we try to foster an environment to learn and grow and improve and get better. And I say regularly in a room, what if your goal was just to be better at the end of the day than you were at the beginning of the day, and you did that every day? How proficient would you be a week from now, a month from now, a year from now? We've got some really, really good traders in the room, and we have a great, great atmosphere to help each other. So with that being said, we're going to go right to work here. Initial balance period. Each trading day, the IBP initial balance period is identified by the total range of the first hour of trading. I live on East Coast time. All of our times are 9:30 start, 4:15 end. So from 9:30 to 10:30 is the initial balance period. And in extensions of this are powerful levels that the market tends to react to every day. We're over 90% with hitting the target. I've got here that some days those targets are, 10 or 11 points away. Today it was 11.5, and I'll show you that trade at the end. I'm going to pull a chart over. Today's chart was a lot of fun. So the extension of the IBP, 50%, we call that IBP 1.5, gets hit over 90% of the time, and we know the direction. And we'll show you pretty much what that looks like right here. IBP is just simply this red dash line, and it comes on a chart at 10:30. This set of indicators, this is open, halfback IBP, this is IBP 1.5, this is IBP 2.0. Now, on this particular day, I think this, I can tell you, it's 1, 2, 3, 4, 5, 6.5 point trade. So the market gets below IBP, comes back up, and we get what we call a weak Batman. Right on to weak Batmans or spectacular trades in trend, and you can see what a good trade it was. But it's at IBP level, going up, no, we're not going up, no, we're not, go down to 1.5, 6.5 points. 90% of the time that happens, we often will get really nice signals at this level because the market is trying to work to specific things. Here it is on the upside. This is I think like a 12 or 13 point move. Today's IBP was 11.5 or 12. This is a large range day. But what we have is we're meandered around. This is 1230, 1240. But we have this signal is 86%, has an 86% win rate. This green bar below our cyan smart price band. 86% of the time, this is going to win. 90% of the time, we're going up to this green line. So hopping in this trade right here and riding it all the way up wasn't very hard at all. It was a pretty easy trade for us to take in the room. So that's it. IBP 1.5. IBP comes out at 10:30. 1.5 is 50% of the total range. This set of indicators, we have an indicator that prints these automatically, and that's available. We make that available to all our members. The next trade, or the next slide that I've got, I want to talk about is this is a new signal trade system that was developed by one of our members. We call it the Genie. Dennis has been trading over 50 years. And he's learned a thing or two along the way. Some of the things he's learned, like all of us, we would like to forget. And a lot of things that he's learned sort of come together and make a difference in trading. We have we call it trend continuation confirmation, TCC look, that we use Smart Price Band for. I'll show you what that is in a minute. But then Dennis has refined the entry method, and it is genius. And the exact details aren't that important. Different people will take it and make it their own. They'll trade the concept and make it a little bit different. We like this trade so much that we have all of the specifics and the rules and charts listed on a member's home page in the members area. We have over 100 pages of information in the members area. But this one we have on the front page. We like it so well. And here's what it looks like. Trend continuation is this simple, and it works this well. We have Smart Price Band that was red over here, I can promise you, and it turns red at a lower level than it was previous. Well, that tells me the market is cycling down. Turns red, down. Turns red, oops, it gets caught. It's blue higher here, so the market starts cycling up. But anyway, the genie trade is this. It can be 2 ticks below exactly on a Smart Price Band, and you can see it nailed this entry all the way down. And then we've got other trend continuation. We got other signals, red above red here. That's a really nice signal. But then over here, we're blue higher here than here. We can take out this by 3 ticks. This took it out 1 tick, and you can see the entry there. Goes up 4 or 5 bars. So, here's 2 examples. 86%, 84%, 85, we'll call it 85% win rate. Some days we get 1 of these, some days we get 4 or 5 of these, just depends on market conditions. But this was developed by Dennis, and we appreciate Dennis. We have other trades that were developed by members that we test and look at, and it made a huge difference in our trading. That's just part of the benefit of being a member. You have to trade with the trend. When I've talked to hundreds of traders in the past couple of years, and you ask people, do you trade with the trend, or do you believe in trading with the trend? And 99% of the people go, yeah. And I go, why? And I get 99 different answers, and that's okay, and they're all right. That's just opinion. I'm going to give you a fact in a minute of why we trade. It's not an opinion. I'm going to give you a fact of why we trade with the trend. But it is, in the ES, it's really critical because of all of the program buying and people that are using programs to trade the market. And 95% of those are built on catching a trending cycle. Nothing cycles better than the ES when it starts to cycle. And really, really, really is a spectacular way to trade. So, we look for higher highs and higher lows, lower highs and lower lows. And sometimes you can look at structure and it's great, and other times it's just like, it gets noisy. All markets get noisy, the ES gets noisy, and we have a unique way that we identify what highs and lows to look at, and it produces some spectacular results. While we're doing this, we're going to talk about how we use Trap Trader Oscillator, which if I have another, and I won't, but if I have another child, I would name it Thomas something Oscar Myers. I love TTO. I love TTO so much. It is the most amazing tool I have ever seen. So we want to find a trend, and then we want to find the very best place to try to take advantage of that trend, where if the signal is inaccurate, and we get some, we can minimize the loss, small losses, and we can maximize the wins. What if you had a system that all of your winners were larger than all of your losers, and you had more winners than losers? Think about that for a minute. We have several of those in the room that we use and we trade. But we use TTO to figure out where it is smart to enter the market, and its track record is spectacular. So here we have a market that's trending now. We've actually have a trend reversal signal over here. So what we look for is the first TTO dot. We're down, 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 down. Now we're in a downtrend here. But if you were to read this structure, you'd go up, 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 trends up. We only read highs and lows that are associated with a TTO extreme reading above or below our purple line. So we don't get on the wrong side here. Now, in this case, it wouldn't have been bad. You could read this and you figure out, oh, well, there's 4 or 5 in this big, big move. But what TTO was saying is, hey, here we're in a downtrend. Let's sell that. Boom. Let's sell that. Boom. Let's sell that. Boom. Let's sell that. Boom. Now, these are weak Batmans. These are 2 trades that are weak Batmans. The other 2 are just TTOX. And this is just a few days ago. This is not like 3 months where I have to go back and find something, whatever. This is just, a few days ago. We're going to look at this in a minute, and I'll just point this out so it'll be familiar. A red bar above a red smart price band. That's not supposed to be there, and we'll talk about that. But anyway, here's the TTOX. It's a weak Batman. One ear's above and one ear's below. That's like 93 or 4% win rate. There's one. There's one. There's just overbought in a downtrend. So the market's coming down, overbought, sell it, overbought, sell it, overbought, sell it, overbought, sell it. It's that simple. Boom, 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 and away we go. Here's what it looks like going the other way. Here we have our TTO dot here that got taken out. That's a violation to the upside. So the trend has changed up. Now, I put some lines here just to let you know what an advantage we have. When price is stalled here and TTO is going, yeah, I think we're going up from here, and we go up. It's pretty cool. But there's one. Let's buy that. That also happens to be, we get about one of these a lifetime. That's not true. We don't get them very often. This win rate's over 97%. This green bar below a cyan line with a TTOX. It's just like wham. And then here's another X. We buy this and we buy this, and away we go. So we're in an uptrend. TTO says here too many traders have sold this, and we're going to punish them. Bam. Too many traders have sold this, and we're going to punish them. Too many traders have sold this, and we're going to punish them. And away, and away, and away we go. So that's it. That's our TTOX. And again, I'll show you the past 4 or 5 days. It's been stupid how good it is. We're going to look at a trap. We have a spectacular reading, a TTO reading for a trap. And what happens is that, the market, all markets try to get people on the wrong side, try to get traders on the wrong side, and take advantage of weak money. New money is weak money. Take advantage of weak money to propel their trade in the other direction. So we really get an advance notice of traps. And a setup basically is this. Price actions moving in a direction, up or down, doesn't matter. And it experiences after a substantial run, it looks like it's headed on another continuation. Let's say up, since that's my example. Price is coming down, down, down. We get a 4, 5, or 6 bar run. And then we get a single bar reversal and then a continuation down. But TTO is screaming, nope. There are too many people that sold this here. We are headed in the other direction, and lo and behold, away we go. And we get reversals again. We often get bottom bar or top bar with our traps. So here's what, here's what the chart looks like. There we go. So, wait a minute. I apologize. I got a little carried away with where I put this, and I apologize. See if I can reduce that. Oh, well. Anyway, what we had is price coming down, and then we have this. I'll show you I've got a smaller chart in a minute. It's exactly the same thing. But we have price coming down, 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 and then we get this continuation single bar, and TTO is just screaming, no, 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 no. We're going up. See how much higher this is than this. So that's a pattern Rob was talking about, where we've got weak new money coming in here, getting stopped out. This one was particularly good because it went up and pivot retagged into this, tested this low, and then took off. And then you can see we're 30 points higher throughout the day. Really, this was the bottom bar of the day for sure. Here's a little better. Here's a little better look. We're in a downtrend. We have our weak Batman. We're coming down 1, 2, 3, 4 continuation bars, and then price gets stalled. Yeah, okay. Yeah, we're probably not going down here, team. Just so you'll know, when TTO is doing this for us, yeah, we're probably not. You can see building of accumulation here, and I can promise you this move was a mirror of this. So we get our single bar trap, and away we go. And this was the bottom bar of the day, of this move. I'm sorry, and it may have been bottom bar of the day. It happened at 10:30, so that's about normal when the ES would tend to reverse on a 30-minute. So then if we go look, we can see a dot here. That's a good place to buy it. Dot here. That's a good place to buy it. And on and on. Directional bias. This is, I think we've about 6 months. We've been trading this 6 or 7 months. We know that large account traders determine overall direction, and smaller accounts like us put the noise in. And a huge advantage is to know where the large traders are likely to be taking action. I have a question here that I'm going to pause this. The bars are Smart Rincos. Those are proprietary for us. Rob has coded those, and are coded to order flow and some other things, and they are spectacular. I don't have charts. We do have inaccurate signals. Somebody asked about what stops do you take. Stops, money management. Money management's up to the trader. We stop to structure. I'll show you what that means in a minute. But we have people that use 3 tick stops, and we have people that use 3-point stops. I will tell you, the people that use 3 tick stops get their stops hit a lot. The people that use 3-point stops almost never get hit. So, but that's just so personal. That's just so up to the trader. If you're trading lunch money, you're going to use a real tight stop, and you're going to get hit a lot, like Rob talked about. If you're trading risk capital, you're going to use a stop relative to the structure of the market, or the structure and of the structure you're trading, and you're going to be pretty safe. We talk about that regularly in the room. But to answer the question, one trader should always use a 3-tick or 8-tick or 30-tick stop. That's totally inaccurate. Totally inaccurate. So lots and lots and lots of large market traders use 30-minute bars to trade. And trend on a 30-minute bar is 30-minute bar violation. When we have a takeout to the upside or the downside, the market tends to continue in that direction about 80% of the time. Now, please understand, 80% is not every day. It's not every time. 80% is exactly 80%. And so what is that? 8 and 8, 16, probably 15 or 16 days out of the month this happens, and 4 or 5 or 6 days out of the month it doesn't. But what I'm going to show you is very, very real, and we trade this in the room. We use this as a guide to trade, and it's extremely, extremely valuable. So I'm going to go ahead and pull this up to explain it. This is last week, Tuesday, Wednesday, Thursday, and let me see if I can make this a little smaller. I can't there. Somehow I've made this too big, and I apologize. But here's the way that works. The blue bar is what we call A period, or 9:30 to 10. So here's the range. Here's the market sells off huge on this day. Starts working up, and here's A period. Opens, comes down a little, goes up, comes down, opens. When B period takes out A, in this case to the upside, the large traders say, okay, I have a 30-minute bar violation to the upside, and I'm going to trade on the long side the rest of the day. Here we have an A period. B took out A to the downside, goes up a little bit, and this is like 18 or 19 points. This goes down and hits IBP 2.0, actually hits 1.5 and 2.0, and then reverses and takes off to the upside. But again, the first directional bias, B took it out to the downside. It went up, wham, large, large, large down move. Here, here's A. B takes it out to the upside. And on this particular case, A's high held for 3 hours, which, again, is good to know that the market is going to head that way. Statistical probabilities is the key to the kingdom in trading, short-term trading. Short-term trading. I'm going to give you my opinion, and if you disagree, you're right, and I'm wrong. We talk about facts, and facts are facts. Opinions are just that. I'm going to give you my opinion. It's not mine. I've learned it from some really good traders. But anyway, here it is. People think short-term trading is about predicting the future, predicting something that can't be predicted. They are wrong. Short-term trading is about finding a statistical edge and trading that edge to your benefit. And that's true. That's true. We have some stuff here I'm going to share with you. And then again, like I said, I'm going to share today's chart and just show you one thing to show you how real and viable this is. We have a gift trade that wins almost 75% of the time. We have a trade, a red bar above a red smart price band. Now I'm going to go specifically through that when I show you the chart and tell you why that is so spectacular. 86% of the time. We have a green below, and actually it's cyan or blue smart price band. Red above red, green below green. 82% of the time. A touch and go up is 85. Touch and go down is 76. I'm going to show you what these are, but here's the thing. Let's take, and I'm going to use 80% because it's just a round number, and I can do it in my head. Let's say we have a trade that has an 80% win history over the past year. Now, past performance is no guarantee of future market action, so we don't know what's going to happen in the future. But let's play along for a minute and say we're going to get 80%. That greed and fear and human nature is not going to change drastically in the next year. And the people that traded it last year are going to trade it next year. So I've got an 80%. I got a signal, red above red, 86%. I'm going to trade that. That's all I'm going to trade. So I'm going to knock that down to 80 because I'm going to muff a couple. I'm going to make a bad entry and have to get out, or I'm going to, drink a cup of coffee, or I'm going to filter. I'm going to say, yeah, I'm just not going to take it for whatever reason, which is not very smart. But so I've got an 80% win rate. So I'm going to win 8 out of 10. So that means I'm going to win close to 80 out of 100. So if I have 100 trades in a month and I win 80 and lose 20, I net 60. at $50 a contract, that's $3,000 a contract. Leveraged however a trader would like to leverage it, but at 86% or at 80%, you can leverage it pretty high, in my opinion. That's just my opinion. But you can take advantage of that. So if a trader will come to me and say, I'm going to trade an 80% trade, how much money will I have in my account 5 years from now? I can tell them. Again, assuming that human nature doesn't change. We can predict an account size 6 months from now, a year from now. Now, I can't tell you next week, because 80% is not 8 out of 10. It's not even 80 out of 100. It's very, very close to 800 out of 1,000. But, statistical anomalies come in and we get skewed one way or the other. But over the next 100 trades, we're going to be between 75 and 85% winners. And we know what a winner's worth and yada, yada, yada. All of our trades were tested this way on purpose so we could predict how an account would grow. 2 points. Each trade is a winning trade is 2 or more points. And we trade for the purpose of study 8-tick stop, 2-point stop. So what we do is we trade tick for tick. Now, let's say we have an 80% and we go drink a cup of coffee or answer an email and we miss a winner. This number goes up. Well, let's say we get in a trade and it just goes like 10 or 12 or 15 points before I can get out. And my 2 goes to 15. Well, my bias can always get better. It can never get worse, again, unless human nature changes. So I can only improve on these numbers unless I start monkeying with them. And we talk about that in the room every day. About, take your trade system and trade your trade and grow your account. That's how we preach it all the time, every day. Here's a touch and go. Here's a gift trade. There's a green below. There's a green below blue. There's a touch and go. There's a red above. That's also a gift trade. Here's a blue touch and go. Here's a gift trade. And so you can see, here's a gift trade. Somebody wanted to see one that didn't work. Here's a gift trade that didn't work right here. We go down and we'll talk, it won't do you any good to know what a gift trade is unless you're in the room. And if you do, all of this stuff is ready, available, and we'll help you get to all of those. So I'm going to do this at this time. I'm going to, I think, yeah, let's do this. What I've done here is I've marked the red above and the green below. This has 86% win rate when you combine both of them, okay? And let's just go through the trading day. There's a red above red. Now, here's why this works so well. Smart price span is brilliant. It's absolutely brilliant. It's red here, it turns red lower here, we go down. It turns red lower here, we go down. We're blue here, we turn blue higher here, it goes up. We turn blue higher here and it goes up. It is absolutely amazing to trade. So when you have a down trend, prices should be below a moving average, and here they are. And it goes down, 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 down. So our smart Rinkos are red. Okay, it pushes back 3 points, but it doesn't phase our line. And then we get a reversal headed back down. Well, the likelihood of this going down versus up is 86%. That's just, red bar is supposed to be below the line. There we go. Here, we're a little late. On the upside, we get what we call a touch and go more than we get green below. But here's 2-point winner, 2 or more points, 2 or more points. Somebody keep up with that. That's 2. That's 3. There's the loser. Somebody said something about there's a gift trade loser. 3. Okay, we're 3 and 1. Red above 2, 4 and 1. Red above 5 and 1. Red above 6 and 1. Red above 7 and 1. Red above 8 and 1. I didn't count that one. You probably should. Let's count it. That's mostly 9 and 1 or 8 and 1. Let's don't count it. 8 and 1. We don't have to count it. There's green below, 9 and 1, 10 and 1. Oh, that's red above, and that one did not win. I didn't see that one. Okay, that's 10 and 2, 11 and 2, 12 and 2. So 14 signals, 12 winners. Now, what's uncommon about this is not the win rate. They do it all the time. What's uncommon about this is that we got 14 in a day. Our win rate was 92, 91, 92, 88, something. Anyway, 88% of the time. So that was today's chart. The other thing I wanted to show while I've got it here, and then we'll get back on task, and we're almost done. Here, IBP, here's our IBP trade. Here's IBP, here's 1.5. IBP is at 75. $11 and a tick. So it's 11 and a quarter points from IBP. But what if you took this red above red, comes down pivot retax, which is what you want. You want an area to be tested, goes up, tests it, comes down, tests it, falls apart and comes here. There's 12 or 13 points. This line, this Burley line we're going to talk about here in just a second, that was our daily range expansion, and we hit that. So it's that simple. We get red above. We know that this target's 90% once we get under here. So we just hang on to it until it gets here. Put your target right there or somewhere down in here and let the good times roll. So let me go ahead and get that out of our way. Yeah, Gord, thanks. In a winning trade, David, we studied two. And the reason is that it's the only way you can do money management if you keep them easy. The question was, and it was private, everybody can't see it, what do you qualify a winner? 2 or more continuation bars, these are 1 point each. So 2 points, that's 2 point, 2 point, 2 point, 2 point. The 12 for 14 today would have netted 20 points. Netted 20 points for the people that trade. And we have people that trade that. They just sit there and trade it. Yeah, absolutely. Thank you, Rob. And that's up to the trader. We can't tell you how to treat your money. Okay, range expansion. Every day I'm good on time. Every day. One thing we know, the market's going to expand up or down, a lot or little. We don't know. Nobody knows that. Nobody knows the future. We know it's going to spread out some. So how cool would it be to know pretty much within a few points most days, over 70% of the time, how far the market is going to move? Would that change the way you trade? And the answer is it should change the way you trade. As you can see, this is almost a year. It's 9 months or so. In most day, I mean on 6, 7, 5 point, 9 point, 12 point days, it's really good at forecasting where we're going to go. There's a holiday. Okay, it starts to expand. This is what amazed me. 2 days in a row, it called for 107 and 109 or something, and we hit them within a few ticks. It was just like scary how good that was. This again is a holiday. This was last week. I did this, put this together over the weekend. So Monday was a holiday. Doesn't count. It's right here. Tuesday, Wednesday, Thursday, Friday. So Tuesday, our range expectation was for 31 points. We put this in a room at 9:27 every morning. And we got 32 points. The next day, Wednesday, 31 was expected. 54. Thursday, we expected 32 and got 34 and a half. Friday, we expected 34 and a half and got 38. I jotted down this week. Monday, it was target was 32. We actually had 36 and a half. Tuesday, we missed. We had a miss. It was the only day in the last 2 weeks we've missed. We were expecting 36 and a half and only got 34 and a half. So expecting 36 points, we missed it by 2. Wednesday, we expected 34.5 and got 47. Today, our expectation was 47.5 points. Now, we start today expecting 47.5 points. And people say we're crazy. And then 60 points later, they go, wow, that's pretty cool. We got 72.5. I think tomorrow, in case you want to jot it down, is 50 even. I think that's the number. Tomorrow, our target will be 50 points. Now, how do we use that? Well, the market's headed. Once we feel like a direction is achieved, and sometimes the market will be going up and we'll put a line up here. It'll reverse and come down and we'll put a line down here. We're not into the crystal ball clairvoyant, try to tell you what the future's going to be. We just know that most days we can get you within a few points of where we're going to go. Yesterday, we had a trade that we had a red above red, I think, or a TTOX. Anyway, we had a 5-star signal that was 85 or 88% winner that was 11 points away from range expectation. And one of our members said, hey, our range expectation's right there. And I mean, he no sooner had it typed out, this thing went straight down 11 points to our target. Now, we have lots of traders that take advantage of that. Not everybody can trade that. Not everybody in the room is proficient enough to trade that, but they're getting there and they're working on it and we're helping them. And that's our job, is to help them grow there. So it keeps you in a trade. If you know what's likely going to be there, it helps you filter through the noise. So I told you Rob was genius. See, this is if you'll read, predicts 30-minute bar breakouts at 96% level. And I'm trying to get my head wrapped around it. And once I do, it'll be another arrow in our quiver that just... But as for now, we have signals that win 80, 85, 90% of the time, and those are pretty easy to spot, and we talk about them in the room, and most of our traders jump in there. Okay, we're going to wrap this up. Benefits of the room. Learn price action patterns, become subconscious. Trading is a habit. I know that, and I can't go into that now. That's my favorite subject, is talk about the subconscious control of your trading account. And I know it's true because traders will tell me, yeah, I know I should have taken that, but I didn't. And I have no idea why I did that. We'll talk ourselves into or out of situations over and over and over throughout the day that deviate from what we know we should do. Trap trader oscillator patterns are spectacular. It is the single most powerful tool I could ever imagine getting to trade with. We have great traders in the room, and we have people in the room that I think still have not taken a live trade, are learning and are growing, and will have no issues growing an account once they get started. They're putting in the work and they're making themselves bulletproof. And they will not think that trading is about predicting the future. They will think trading is about finding one of those red bars above the red line, getting in that and managing it for maximum benefit. Trends, how to trade with a trend. The reason we trade with a trend is that trend moves in the direction of the trend are larger than moves against the trend. It has to be that way, or it can't. If we're not getting larger waves, moves, legs up and down, it can't go up. So you can trade on the side of the large moves, or you can trade on the side of the small moves. We have found it beneficial to trade on the size of the large moves. And then if you get in one of those, we call them wild hogs in Tennessee, if you get in one of those great moves that just starts tanking, and you've got a target 12 or 13 points away that are 90% to get there, you can just sort of say, okay, I think I'll let that go. Reap the benefits of the Smart Patterns trading system. It's thousands and thousands and thousands of hours, and Rob's genius. Rob was the largest Emini trader in the world for years, and you're starting to see why. His tools are spectacular. Personal development and growth that's critical to you as a trader You can learn things about the markets you can't learn anywhere else. Excuse me. We talk about cause and effect all day. I'm not going to. You can become a great trader. Rob was talking in the beginning, and I jotted a note down. Everybody wants to have, and nobody wants to become. Everybody wants to take great trades, but who's willing to put in the time and effort to develop themselves into a great trader? If trading is the cause, the benefits come from being a great trader. So don't chase the money. Let the money come to you. You become proficient at doing this. And at the end of the day, somebody somewhere, I don't know who it is, but I'd like to meet them, will put some money in your account. So we want you to become a great trader. You can define that any way that you would like. Some people define that as taking the signals that are proving to win over and over and over again and not trying to predict the future. We have a very supportive group of traders in the room that are helping each other out. It's the most amazing thing I've ever seen. I say that, people don't believe it when I do a webinar. I say that, people don't believe it. They come to the room and they go, wow, you guys are different. You guys really do care about each other and are helpful. So we've got some grateful people, some people that have taken Rob's tools and our approach to trading and have sort of made some sense out of this and figured out a way to move an account forward and are very grateful. And we get some really nice comments from people, and that's the stuff that lasts. Money comes and goes, and it's good, it's useful, it's necessary for life. But when somebody becomes better, let's say you're a member in the room, Dennis or Rich, or it just goes on. And Rich gave us a touch and go, and Dennis gave us a genie, and we just go on and on and on. And people take that and they trade that, and they change their lives, and they change the lives of their family, and they start to become significant and make a difference. It is really, really, really very, very powerful. So, Rob, if you are still here, 44 minutes, thank you very much. I am done. I'm going to look at some. I know Rob's been answering questions, and I'm certainly not going to look over his shoulder. Let me see.
I think I got all the questions, Steve. I think we're good to go, bro.
All right. If you think of questions later on, and if you'll send it to support@stockindextradingroom.com, Robert, I want to get to those. I'll get to the ones that I'm qualified for and hand the ones that I'm not off to him. No, William, here's a question. It's private. William, would you? I'm going to just read that. It says, so did I get this right? You're using 2-point stops. No, we don't use 2-point stops. I'm not qualified to give you financial advice. If you'll tell me how much money you make, and if you're married, how much your wife makes, and how much you have in your retirement, and how much you want to retire with, and what your mortgage is, and yada, 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 all that stuff that's not my concern. I'll tell you whether or not you should use a tight stop or not. Our studies notice that we get 2 or more continuation bars most all the time. So we just did it to 2 bars. And so we said, okay, what if I had a trade that wins 80% of the time, and I took 8 ticks or 2 points, and I gave 2 points? What would my account be like six months from now? So I can tell you. You trade an 80% win rate, I can tell you how much money you'll have in your account within a few percentage points 6 months from now.
Hey, Steve.
Yep.
This subject, a lot of people have asked about stops today.
Okay.
And this is something that that's a whole nother webinar. And I'm going to tell you why. A lot of traders, if you can understand the market from and I'm not going to hijack the webinar here. I'm going to keep this pretty succinct, but you need to think about this for those who would ask questions about stops. A stop is not your risk unless it's small, because as Steve said earlier, if you place a small stop, you're going to get hit, you're going to get hit, you're going to get hit, you're going to get hit. So if you want your stop to get hit, place it really close. And if you work that out so it works, that's fine. That's fine. It can work for you if the math, Steve's basically describing the math of it. You got to look at the math. What's it going to look like in 6 months if you're doing that? But what I want when I'm trading is I want a stop that doesn't get hit at all. I want a stop that gets hit less than 14% of the time. I want to win 86% of the time. So initially, I set my stops out a good ways because I'm trading into situations that have a high win rate. Well, this is what Steve's showing you. We work very hard to find high win rates. So the stop, though it's important that you have one and that you're managing it correctly and everything else, what you want is a stop that doesn't get hit. And that's something that we teach in the rooms implicitly or explicitly. And Steve's actually been talking about that. But if you're placing a stop for your trade and you're thinking of that as an order, then what happens is it gets hit over and over and over again. You end up with a 30% win rate, and it's very hard to be successful with a 30% win rate unless you're just getting caught in gargantuan trades. Most people who have a low win rate like that, they can't bear to hold a trade into a big win because they're so fearful that they're going to get stopped out again, and then it turns into a failure cycle. So it's real important to have a high win rate like the win rate Steve's showing you, ones that are up in the 80s, and not having those stops get hit and managing the trade to success over and over and over again, and getting to a point where you know that so well and it's so installed within your consciousness that you can do it and be happy at the same time. So just want to share that with you. Okay. Thanks, guys.
No, that's perfect. Thank you so much. Anything else? If not, we're going to get out of here early.
Okay. Sounds good to me. Thanks, everybody, for coming in. Thank you, Steve, for taking the time to present. Thank everybody for taking the time to come in and spend your afternoon with us, and giving Steve the opportunity to share with you something that he's really passionate about, that he does every day in the trading room. And so come join him at stockindextradingroom.com. And if you have the details there, again, stock index trading. I thought I had the email there, but I think it's stockindextradingroom@gmail.com or support@stockindextradingroom.com. Okay, guys. Thanks again. Bye-bye.